September has offered a mixed bag of swing trades, most of which have been dissected in detail in earlier technical analysis episodes. Here is what happened to them and the net results of each and every one of them. As the last period has come with quite a lot of trades, this follow-up episode will be divided into two parts. But before anything, of course, not financial advice. See the disclaimer in the beginning for more information. And as always, if you appreciate these episodes, please like and subscribe and share it with others who may benefit from watching it too. These episodes take a lot of time to write and produce, and this channel would not be possible without your like and subscribe clicking support. The swing trades we will go through in this episode are Fifth Planet, Cell Impact, Enad Global 7, Ethereum, Fingerprint Cards, Kancera, Nikola, and Quickbit. Kicking it off with my biggest loser, Fifth Planet has, since my buying it, lost me an impressive 34%. As mentioned in a previous episode where I disclosed my reasoning for taking this trade, I made it very clear it was a high-risk one. And this certainly proved correct, as the stock neither shows too much hope at the moment. It's still within its descending triangle and has just covered its gap from the 8th of May on the daily. On top of that, the RSI made a clear touch on the upper bearish blue on the weekly, upon which it also re-entered the bearish blue RSI channel on the daily after a fairly short visit into bullish red territory. This sure doesn't excite me much. In its bullish defense, however, the price is, as of producing this, resting on the EMA 200 on the daily and the EMA 50 on the weekly, and is still at least within the triangle. The weekly RSI also still resides within a bullish red channel, and the price is resting on a key horizontal support level at around 120. However, if this little cluster of support breaks, any stockholder might do well in preparing for a long, cold winter. Stocks like Fifth Planet is the reason why you should never put all your eggs into one basket unless you owe money to that dodgy hustling old lady down the street. Thug she is. Now, I'm sure I'll get a lot of hate from Fifth Planet hooligans for this, perhaps 10 dislikes or so, but that's fine. At least keep in mind that if you were to feel hurt by this, it might mean you're either too heavily invested in the company, or you might need to consider disassociating your feelings from the company. For let's face it, it's a stock. Nothing more, nothing less. And investing in stocks is to a good extent a game. Besides, I'm not here to tell you that shit is gold. I'm here to bring clarity and present the markets as they are, raw and naked. For the truth is often unpleasant. And for now, unless a move of significance takes place soon, Fifth Planet looks like it's gonna stay that way. Unpleasant. For let's face it, if it had the skills to go down by 99.5% at most in just 4.5 years, which is a compounded minus 70% per year by the way, trust me when I say it can go down another 99% until 2025. My plan with this one? I will sell off at least half of my position on any temporary rally. The rest I'll gamble with, just in case. If Fifth Planet is a hurling long shot that can leave you with a hole in your head, at least this one merely calls for an aspirin to cure the headaches. As mentioned in the recent Quick TA episode, the technicals still support a 50% short-term rise to the upside, but for some reason it insists on acting weak. And weakness doesn't translate into success unless you short the living wits out of it, which you cannot do in this one. Now, my initial position amounted to 6.7% of my portfolio value. Upon the constant failure to neither break above the 28 kronor resistance nor to break out of the descending channel, and as the Swedish OMXS30 did show short-term tendencies of a correction, I decided to sell off 25% of my position at 24.65 to offload some of the risk. But here's a thing that has grown to bother me. For as the index goes from recent strength to strength, Cell Impact doesn't seem to respond well to that at all. It's rather stuck in the channel and keeps being rejected by the EMA 20 and 50 and was immediately rejected at the previous local top, thus creating a double top. And speaking of tops, on top of that, we have a big soggy red Kumu cloud hanging over us like a wet blanket. But there's still hope. Now, the key area to keep an extra eye on here is the support and resistance at 25 kroner. If the index stays strong and if we can stay above this level and push out of this godforsaken channel, we do in fact stand every chance in the world for a spastic move towards 34 to 38. And this is in a bullish case, if the stock actually manages to wake up from its slumber. For as it stands right now, any 80-year-old woman would easily wrestle the stock to the ground without much resistance. And unless the index goes parabolic soon, I will not expect any near future sell impact miracles. A break below this 25 kroner level on the other hand, one in which the price actually stays below, and a break below the EMA 200 on the daily risks plunging us all the way down to the diagonal support line at around 15 kroner. My sell impact plan is quite simple. If the index were to enter a duly expected correction, and if sell impact were to break below these two key supports, expected to drop some 40% from the current 25 kroner level, in such case I will release the entirety of my position at a minus 20% loss or a minus 1% return on my portfolio. If the index stays strong on the other hand, I'll be more patient. For don't get me wrong, I'm still optimistic about a temporary spastic move to the upside, but upon that occurring, I'll definitely release my entire position and replace it with something more strong looking. From a gaming theory perspective, the upside from my purchasing price of 26.20 to 34.38, as in an average sell of 36, in relation to the downside of 6, means the odds are stacked 10 to 6 in my favor. And given that the index still shows strength, sticking with my trade is the mathematically right thing to do. So let's now flip the damn coin and see who is right. Moving on to the happy tune of Enad Global 7, this stock has certainly delivered. First of all, a major congratulations to everyone who hopped on board this mini rocket, for it sure has gone from one technical strength to another. This is exactly the type of technical prospects I'm looking to collect, and I did talk warmly about them on a few recent occasions on this channel. So no excuses, and not financial advice. My initial position constituted 8% of my portfolio value. I bought at 37.70 and reloaded another 20% of my initial position at 41 kroner. On September the 4th, I sold half of it at the top of the ascending triangle range at 42.25, both to secure profits and to buy back cheaper should the price bounce. But as the price didn't bounce and instead broke out, I bought back at 46.25, whatever I had sold the day before, and even proceeded to add on some more as the stock was lava hot. And at this point I had 11% of my portfolio invested in Enad. Now, what then followed was an interesting spot where things quickly got tricky. It had to do with diagonal lines, which any regular follower of this channel knows I don't appreciate much. This is because diagonal lines are treacherous and indecisive by nature and can at any given point emerge into whatever else it feels like. One diagonal channel can easily shift into another diagonal channel and then into another and so on. Sell impact is a good example of this, which we did discuss in full in this August follow-up episode. In EG7's case, we had a confirmed ascending triangle, but then the price began hovering around in this area, showing a clear resistance territory which perfectly aligns with a new drawn ascending channel, in which the price was now cruising at resistance. For this reason, I decided to secure some profits and sold off 20% of my entire position at 48.80. When the price then broke out of this channel, it began trading in yet another new one. A technically even more solid one. I therefore sold off another 30% at 56.60, again at the very top of the resistance, upon which the price broke out anew. The short-term technical target stands at 77 kroner, at which I will release the remaining 50%. For a full technical disclosure on how I reached this very target, please watch the quick technical analysis on Enad Global 7 episode. I then went on to add on another 50% to my position at 64.40 as the price began to show technical tendencies of another move to the upside. As in after having sold 50%, meaning that I went from 2x to 1x to 1.5x. It was this textbook continuation pattern, whether it's a triangle or flag in combination with a steadily declining RSI which still remained in a strong bullish red RSI channel, that made me go for it. I set the stop loss at any closing candle below the previous local bottom at around 60 kronor, which would also bring us back to the previous channel. However, this gives me a risk to reward ratio of 12.60 to 4.50, which is equivalent to 2.8 to 1. Definitely an interesting prospect, especially as the index continues to show overall strength. Or shall we rather say strength enough? Given the trades I've taken and given the fact that the stock has significantly increased in value, my current remaining 75% from my maximum position has an average price of 39.50 kronor per share. There is a long way down to break even, to put it mildly. However, I don't have a fixed stop loss for now, but will rather release the position if it were to turn technically sour. Or, of course, release it all if or when it reaches 77 kronor. I'm not gonna go too deep into this one, as I will gradually shuffle in some Ethereum and Bitcoin trades in future episodes as interesting swing prospects surface on the charts. Now, Ethereum is one of my major net winners of all time, but also the equity in which I lost $100,000 in an hour in early 2018. Yeah, 100 grand realized loss in an hour. Suck on that and check it out. In this case though, I bought a more humble position at $348 after a clear lower bullish red RSI touch, and after the price found support at a horizontal line, the Ichimoku cloud, the previous local high, both its spike high and closing highs, and the 618 fib. I then sold off a good chunk at 360 as the price broke out of its ascending channel. Ethereum has taken out two pivotal highs and did make a clear lower bullish red RSI touch on the weekly back in March. Long term things look good for Ethereum. This is in fact more of a position trade than it is a swing trade. And to those of you who don't know, a position trade is a technical trade that you intend to keep over a longer period of time, usually a few years or so. My current position is still at a humble profit, but nothing much to account for yet. I bought Fingerprint on the 9th of September at 1750 as it was obvious the stock was in an ascending triangle, a continuation formation by all means. My initial position was no more than 6% of my portfolio value, as my plan all along was to add on more once the technical coast was clear. I'm talking about the reversed head and shoulders and the previous pivot high at 23 kronor. On September 24th, we did take out that important top. However, later that very same day, the price began a steep plummet at which the price dropped by some 22% at most. I did add on here, but did not expect the price to drop that much, and my Fingerprint Cards swing trade now represents 16.5% of my portfolio value. As it stands, my current average price is at 20 kronor, or 20.02 to be precise. Now, there are a lot of conflicting technicals in Fingerprint. Initially, everything went according to the plan. Things looked strong and solid. Then we encountered the first negative sign as we got rejected by the EMA 200 on the weekly and the previous local pivot top. After that, the price has looked ever so sour and has, to my dismay, found its way back into the channel again. This of course is crap, however I do expect at least a bounce up soon, perhaps to the resistance line of the descending channel, at which I will release a good part of my position for now, until the technicals have made up their mind. For as of producing this, the price is right at the fib 618 and the EMA 50 and 200 on the daily. And for whatever it's worth, we've just had a golden cross. These of course mean less whenever an equity is moving sideways, for as we can see, the last three crosses, whether golden crosses or death crosses, have taken place at the opposite tops or bottoms. Death cross. I bloody hate that term, it sounds like something out of a comic book. Usually a golden cross is a bullish sign, but here it has taken place at the very top and vice versa. Delving into the hourly, the price did find support on the EMA 200 for some time, which was also a horizontal support level, but then the stock decided to roll over into this bleeding type of movement where each hour bar is slightly lower than the previous. Add to this sour mix a depressing looking RSI on the hourly. And as just mentioned, what particularly worries me is that the price has found its way back into the descending channel again. This might very well be it for now, or we may at least be in for some waiting. As if there hasn't been enough of that already. As anticlimactic as Fingerprint might be in the short term, I neither want to sell too much now, at least not until the technical fog has scattered. Rash moves and panic-ridden decisions rarely end well. Long term, on the other hand, I'm still very bullish, and I do treat my Fingerprint card position in a similar fashion as that of Ethereum. That is a position trade, not just a swing trade. For a full analysis on Kancera, please watch this recent technical analysis episode. Now, I bought this stock myself at 3.075 near the bottom of this cup looking thingy, and my position amounted to 6% of my portfolio value. The technicals were all strongly lined up as the price respected horizontal support and the RSI was solid on both the hourly, daily and weekly. However, as the price began to tank, I sold it all at 3.70. This was due to a few reasons. First of all, the sell-off was massive. In such cases, the price rarely if ever recovers strongly immediately after, and I'd rather take my money to the sideline to reassess the technicals soberly. Secondly, we had a long RSI divergence on the hourly. And finally, as we broke below the EMA 20 and 50 on the hourly, the Ichimoku as well as the key horizontal support and previous 4-year top, it was all I needed to call it a day for now. Now, if it looks like a duck and walks like a duck, it's often a duck. Let's not fool ourselves, the short term does look really weak indeed, but if the price can recover above the EMAs and the Ichimoku on the hourly, that could be the kickstart needed to rise this toothless runner from the dead. Of course, the ideal bullishness would be if we were to find a new high. I'm sure it can happen, but until the short-term technicals flip from depressing to at least a chuckle, I just don't think that's in the cards just yet. Aggressive sell-offs like these are typically preceded by times of waiting, boring and often frustrating times, and given that I'm a swing trader myself, I'd rather call it a day until Kancera shows some strong signs of recovery. This was a sour grape and a reason why I generally stay away from American stocks. I bought for 6% of my portfolio as the price was bouncing on the horizontal support and as it showed tendencies of being in recovery mode. Then the controversial CEO of the company, Trevor Milton, known for his little Twitter trolling sprees, decided to resign. Luckily for me, I sold 60% of my position just 2 days after I'd bought it as I did not like the technical price development on the hourly chart. Support line or not, the price showed clear tendencies of a continuation and the RSI was stupidly weak. Unfortunately for me, and for some inexplicable reason, I did not release the remaining 40% until at 17:30, which ended up in the red. Another few reasons why I don't like American stocks too much, or any non-European stock for that matter, are because the trading fees are much higher, but also because they tend to be a bit too jumpy and gappy for my taste. And also because they force me to stay on call all day long, at which I risk missing out on key technical surprises. But that's just the way it is. For some markets just don't fit your trading style. And finally, this familiar old face. After a long hibernation, the stock finally broke out of its descending triangle and at good trading volumes. Finally, as I expected a strong reaction, at least in the short term, I got myself a big position. A position that amounted to 19% of my entire portfolio at 11.20. The biggest single trade I'd taken since Starvolt. But instead of raging and kicking upwards like an angry trapped bull, it turned Ferdinand on me. Now, Quickbit may still make a move, but given its anticlimactic reaction to being set free from its triangular prison, I don't think it appreciates its newfound time in freedom. For that reason, I decided to release half of my position at 11.50 and then another 25% at 11.02. Sure, the stock is still trending, but whenever most stocks go up, I want a faster runner, or rather an angrier bull. I will look into taking another serious position again, but the next time the alarm bell rings, rather than waking up, scratching its ass and going back to snoozing again, I want Quickbit to take a cold shower, put on its armor and go to fucking war. In the next episode, episode 2, we'll work our way through the latter half of the alphabet by summarizing Cybers, Swedbank, Synact, Taurus, Workhouse, Cincino and Swipe. That was all for now. Thank you and goodbye.